59% of Americans cannot cover a $1,000 emergency from savings. We are not talking about a car payment or a medical procedure. That is just one surprise expense. It would force more than half the country to use a credit card. Now go scroll through social media for 30 seconds. Tell me if that matches what you see. It looks like everyone is out there taking luxury vacations and living their best life. But here is the truth. Most of what you see online is a fake image. If you have ever felt like you are behind financially, you might actually be doing a lot better than you think. Today, I am going to walk you through 8 signs that you are actually doing well with money. You are winning even if it does not feel that way. Here is sign number 1. It is the most underrated on this entire list. You can handle an emergency without losing your mind. Imagine your water heater dies or your car blows a tire on the highway. Your first thought is not about which credit card has room, then you are already ahead of more than half of the country. A recent report from 2026 shows that 59% of Americans cannot cover a $1,000 emergency from their savings. We are not talking about a down payment on a house. We are talking about $1,000. So if you have even a couple of $1,000 sitting in a savings account right now, you are already beating the majority. The standard advice for an emergency fund is 3 to 6 months of living expenses saved up. That is solid advice. But personally, I sleep a lot better with 9 to 18 months of cash depending on my cash flow. I know that sounds like a lot of cash. But think about what you are actually buying with that cushion. You are buying time. If you lose your job, you will not be scrambling in week 2 to find a new one that you do not even like. You are not ruining your relationships over money stress. You are not making desperate financial decisions. You can sleep peacefully. That time buffer is worth more than the interest you will earn on it. So ask yourself one question. If something unexpected cost you $1,000 tomorrow, what would your reaction be? That is the true test. Having a solid emergency fund changes how you experience life. Now let us move on to sign number 2. You are stronger than your debt. Your debt is not running your life. Here is how debt actually works for most people. It does not come in one giant decision. It sneaks in. $100 a month here. $50 there. $200 over there. Suddenly, you look at your bank account after payday and wonder where it all went. It is death by 1,000 cuts. Here is the number to know. Lenders look at your debt-to-income ratio and they want it under 36%. That means if you take all of your monthly debt payments and divide them by your gross monthly income, the answer should be 36 cents on the dollar or less. If you are under that, you are in great shape. Recent data from 2025 shows the average American owes about $7,886. By the time you factor in a typical credit card rate sitting above 20% right now, you will pay back close to $16,000 just to clear that balance. That is money flowing straight to the bank and not to your future. And that is just credit cards. Total U.S. consumer debt crossed $18,570 billion in late 2025. Credit card debt alone just hit $1,270 billion. If you pay your cards off in full every month or keep your usage under 30%, you are above average. If your debt-to-income ratio is under that 36% threshold, you are in control. That is the difference when you are stronger than your debt. Sign number 3 is that you are not panicking in the gap between paychecks. Recent research shows roughly 2/3 of Americans are living paycheck to paycheck right now. Before you assume that is a low-income problem, know that 44% of people earning over $100,000 a year are in the exact same position. More income leads to a bigger lifestyle and the same anxiety. I talked about this lifestyle inflation before. The real question is not how much money you make. The question is the relationship between what is coming in and what is going out. Imagine it is Thursday and payday is Friday. If you are refreshing your banking app, hoping you have enough money for the next day, That is a big problem regardless of your salary. But if you have even a small buffer like a month or two of expenses, you are operating from a completely different mental state. The stress drops and you stop making reactive financial moves. You start making proactive choices instead. That is not just financial freedom for the future. That is freedom right now. Honestly, that might be the most undervalued part of getting your money right. The most important things in life are time and health. If you make moves out of desperation, you will be miserable. Sign number 4 is that you have stopped playing the game of other people. This is hard because the entire social media machine is built to make you feel like you are losing. You see the vacation photos and the luxury cars. The reality is a lot of those people are either financially drowning and looking good while doing it, or they are just really lucky to have rich parents. They represent the top 1%. The problem is not their highlight reel. The real problem is what happens in your own head when you compare your real life to their edited one. Studies consistently show that the more you scroll, the worse you feel about your own financial situation, even when your money is completely fine. Here is a grounding number. A recent survey shows the median net worth for Americans in the 35 to 44 age group is $135,600. That is not yacht money or private jet money, but it is real money that real people actually have. It is much better than the illusion most influencers are selling. If you are anywhere near that number or moving toward it, you are doing better than most of the country. The goal is not to beat everyone else. The goal is to build the life you actually want. You cannot do that if you constantly measure yourself against the fiction of someone else. The next section is one of the most important metrics in this country. It could save you tens of thousands of dollars over the course of your life. Let us look at sign number 5. Your credit score is not a disaster. Disaster. I want to be clear about something up front. I do not think you should obsess over your credit score. It is just a byproduct. If you pay your bills on time, keep your balances low, and stay out of consumer debt, your credit score takes care of itself. But your score does matter in the real world because it affects your mortgage rate, your car loan rate, and your insurance premium. A recent consumer credit review shows that the average credit score in the United States is now 713. That has actually been drifting down slightly as more people use credit cards to cover everyday expenses. 713 is still in the good range. Anything above 670 is good. But pulling above 740 is where you actually start unlocking the best rates on loans. 2 things move the needle on your credit score. The first is payment history, meaning you pay on time every time. The second is credit utilization, meaning you are not maxing out your cards. Keep your usage under 30% and pay on time. That is the whole game. It is important to know where you stand. Sign number 6 is that you are actually investing. Only 54% of Americans have a retirement account. Roughly 62% own any stocks whatsoever. That means nearly half of the country is completely on the sidelines while inflation is quietly eating away their purchasing power every single year. If you have an investment account with money going into it on a regular basis, you are already ahead of the majority. Recent data puts the average combined retirement account balance for people in their late 30s and early 40s at just over $92,000. If you are tracking toward that, you are doing great. First, you should capture your full employer match. That is an instant return on your money. Second, you are working towards investing 20 to 25% of your income over time. Third, you are keeping it simple and automatic. You do not need to be picking individual stocks to win this game. This is where you start investing in broad market index funds. You do not need to watch the market every day. You just need to be in it consistently for a long period of time. The people who win the investing game are the ones who do not panic and stay in the longest. Sign number 7 is that you are still learning. You are a lifelong learner. I know that sounds cheesy, but it is actually one of the most financially significant things on this list. Studies of high net worth individuals show that continued learning and skill building are the most common habits they share. The gap between where you are and where you want to be financially is almost always a knowledge gap. Every dollar you earn comes from the value you create in the marketplace. The more valuable you become, the more income you can generate. More income means a bigger shovel to build your wealth. The people who are most secure are the ones who are most valuable and adaptable. The question is simple. In the last 12 months, have you done anything to increase your skills and your earning potential? If the answer is yes, even if it is something small, that is great. You are obviously watching this video right now to learn. Sign number 8 is that you are sleeping at night. I mean, literally. Financial stress is one of the leading drivers of sleep problems and health issues in this country. It is consistently ranked as a top cause of divorce in America. That tells you everything you need to know about what money stress actually costs you. When your head hits the pillow tonight, is your brain running a tab trying to figure out which bill you will push and which one you will pay? Or are you actually at peace? Real wealth is the feeling of knowing that if something went wrong tomorrow, you would be okay. It is knowing your family would be okay. It is knowing you are not one unexpected event away from a full-blown crisis. I know from personal experience how much that peace of mind matters. If you have that even partially, you are winning in a way that no social media post will ever show. There are 2 things money cannot buy: time and health. Here are my honest thoughts at the end of the video. You do not need to be a billionaire. If you have a couple of these signs today, that is a great start. Try and shoot for all 8. The reason I made this video is because social media is completely fake. Everyone is living their best life and pretending to be rich. Most people are just trying to sell you something. Social media is a highlight reel. No one is ever going to go on there and post their bad days. Try to get to all 8 of these things and stop comparing yourself to others. If you are not content, you are never going to be happy. As a human being, you have to be content with what you have. Comparison is the thief of joy. Please remember that the information in this video is for reference only and viewer discretion is advised. I am sharing my own experiences, and this is not financial advice. Always do your own research before making any financial decisions. If you found value in this breakdown, please consider subscribing to my YouTube channel. I post regular videos explaining financial topics simply. Thank you so much for watching. Share this with your friends, and as always, have a prosperous day. Peace.